and secured. Especially this pandemic make everybody hue and cry. People are living in fear for the last few months, but still things have to happen. The fantastic, the human nature is that, initially we are afraid of everything, then we get used to that. So we start living with it. That's one of the greatest asset of all of us. And friends, really thank you so much for giving me an opportunity to be with you today, especially your Dr. Amudan and your college principal and management and all the participants, to have a live demo of stock market trading. Thank you so much. We will go into the site. Friends, I hope that you are all seeing the screen. The screen, what you are seeing is that, all of you are seeing the screen? You get the screen?
Sir. Yes, sir.
Okay.
Yes,
Okay.
sir.
Yes, sir.
Yeah, now you find some red color, blue color, green color, and the variation, and the big screen, and the right side top that you have a small box called the Sensex, Nifty 50, Nifty Bank, all these things I hope you are seeing. Before I go into the technical side of the trading, I would like to explain you about a few, just for 10 minutes, about what is this trading, how it happens, why it should happen, and how overall the process are happening, so that you will be able to better understand at latter part of my class. First is that in a securities market, friends, broadly I call this a security market. It includes all kind of financial instruments which are traded through the stock exchanges in the country. I hope that I am not going into details of what is financial instrument. I hope you would have studied, or you may study in the next syllabus. All financial instruments are a negotiable instrument which carry the value, which are tradable. What do you mean by tradable? Tradable means transferable from one person to another. The ownership of the instrument is a transferable in nature, because they are all recognized by the Negotiable Instrument Act. I hope that you get this point, friends. Now, what is the main purpose of this trading? Friends, when I go back to the basic principle of investing, one of the golden principle of any investment should have a liquidity. You get my point, friends. Liquidity means what? Liquidity means whenever I am able to encash my investment. I invest in certain things. When I want that money back, I could be able to sell or surrender and get back my money. For example, you invest in a fixed deposit in a bank, which is common everybody simply to understand. You have some surplus money, you go and invest in a fixed deposit in a bank, either you or your parents or anybody. It's a common fixed deposit. It's a common instrument. Everybody knows, whether educated or uneducated, everybody knows that. So when you want the money, then what do you do? That you go to a bank, you surrender the fixed deposit and get back your money. Right? This is the simple procedure. Everybody knows this. Okay, so this is called a liquidity. Whenever you want, you sell back or you surrender your instrument and get back your money. Without that, there is no use of investment, or nobody ready to invest without a liquidity. Now we'll come back shortly to the stock market. Now people invest in a stock market. Broadly, I categorize the two kind of instrument. One is that equity-based instrument. Another is a debt-based instrument. Right now, let us not go into the debt side. I will concentrate only on the equity side. I hope that most of you know what is an equity instrument. Equity capital, that's a share capital, which you invest when the company floats the shares to the public. Sometimes, the shares are again classified into two. One is that unlisted segment and the listed segment. Unlisted, again, that there is a private limited and also a public limited. These are all just I'm touching. I am not going into details into that. And now we will concentrate only on the public listed company who floated the shares to the public to raise money by way of capital for the business purposes. I hope that these are all primary activities. And each company, whenever they want to raise capital and they go to the public, they raise by way of capital, which is considered as like a share capital issued to the public. These are all primary market activities. Again, for the time being, I'm setting aside and I'm coming into the shares which are already issued and how they are traded and what is the technology behind it and what is the concept behind it. I'm bringing down narrow and come to a particular area. Now, assuming that you understand what is an equity shares, how the IPO process is done, already the people are holding the shares with them, and how this helps them to create a liquidity. This is what mainly we are going to discuss and understand. Friends, I explained to you about the nature of fixed deposits. What is the instrument? It is a purely a debt instrument which carries an interest as per the term of deposit you put it, depending upon the period and depending upon long durations, everything. The bank pays you interest. That is a return you get on your investment. Are you clear, friends? Okay. Now, why someone should invest in shares? What kind of return you get it? If I go to a fixed deposit, I get a rate of interest depending on the interest rate prevailing in the economy in the country. Accordingly, I will get it. But what is the purpose of investing in equity shares? What kind of return I get it? So equity is a basically very risky product. You understand basically. Whatever you do, friends, first you should understand anything I am telling, not only in the financial market, not only in the investment market, whatever activities we do, first we need to understand what is the risk associated with that activities. When you come to a stock market, when you invest in a shares, there are risks associated with that. What is the risk? Number one, whether the shares have a liquidity in the market. Can you be able to sell or buy? Okay, you can ask me one question that when you subscribe the shares from the company, the reason for investment in shares that there are three kinds of benefits you derive it. One is that whenever the company earns more profit and create more wealth, create more reserves, the price of the shares in the market gets appreciated based on its fundamental, based on its profitability, based on its future growth, everything. Okay. So when the shares are issued at rupees 10, share price appreciated to 1,000, that means the capital have is appreciated from 10 to 1,000. That means 990 rupees you have got an appreciation over a period of time. That is the one of the major income you derive from by investing in your shares. Okay. Number two, when the company earns more income, they share the income to the shareholders by way of dividend. Okay. That is sharing the profit to the shareholders by way of dividend. Number three, that whenever the profits accumulating, the reserves built up. In order to share the reserves to the shareholders again, the company may come with a bonus shares. That means the ratio may be decided depending on the reserve with the company they have it. 1:1, 2:1, 3:1, like that. They'll give me free. So you have a three kind of return when you invest in equity shares. One is the capital appreciation. Number two is the dividend. Number three, in case there is a rights issue or a bonus issue when they share with the shareholders. You understand, friends? Okay, there is an opposite now. If the company does not make money, the company incurs a loss. Instead of capital appreciation, there may be a capital depreciation. That means that even your investment value may go down from the level of your investment. That is the risk associated with this product. So you have to equally prepare that there may be a profit or there may be a loss, not only loss of earning, even sometimes loss in investment also. That is what we need to understand. Okay, having invested, assuming that we have a trust in that particular company, we have invested, but the company is not doing well as we expected. The share price are not going up. It's going down. Then can we go to a company that, that I have invested based on your assurance given in your prospectus, I have invested some shares and now I am not interested to hold the share. I will give the shares back to you. Please take the shares and give me money. Right? Can we do that? Is it the right way, or is it the way only we have? Can we go back to the company and surrender the shares and ask the money back? Can we do that? This is a question I am putting in front of you. Please keep it in mind that you need not answer me now. Please go back, do your homework. That why the company, I keep suspense for the time being that the company will not take back the shares, and they will say that, sorry, I cannot do that. It is up to you to hold the shares or sell it to the shares. So why they do that, I leave the question suspense to you. Please go back and refer your books and answer these questions later. Okay. Now, okay, what is my choice? The fundamental principle of investment is to have a liquidity. Whenever I want, I should sell it and get back my money. So that is the area where the whole secondary market operations comes into picture. So the facilitating the liquidity in the entire stock market, the role and the function done by the stock exchanges. You understand, friends? So the stock exchange is the prime organization, is facilitating the liquidity, providing liquidity of the listed equity shares in the process. So stock exchange, the main function of the stock exchange to facilitate the liquidity of the listed company shares. You understand, friends? This is the fundamental concept. Okay, now I am holding a shares which the company is not taking back. What I should do that? I should go to the stock exchange through which I can sell the shares so that I'll get back my money. You get, my friends? So the platform, what you are saying today, is the platform provided by NSE and BSE. Earlier, you know that 20 years ago, there is a open hall in the stock exchanges, which brokers go there and the open cry system, the auctioning system, thereby the trading was happening. Today, due to the technology advancement, you know, this is a system you are seeing. The platform is versatile, prepared by an excellent software. Thereby, the entire auction process is happening in the stock exchanges. Okay. Now I'll come back again that now the liquidity is provided by the stock exchanges. So where the listing process has been done. What do you mean by that? When the company comes to an IPO to raise capital from the market, the company has to enter into an agreement with the stock exchanges that we are issuing so many number of shares to these following people. These shares may be allowed to be traded through your platform. That is called a listing process, a listing agreement between the issuer of the shares and the facilitator of the exchange. Thereby, the liquidity is created, and so that the investor, the shareholders, whoever wants to sell, they can do. Whoever wants to buy, they can buy. So this is the basic concept. Based on that, I am proceeding by the balanced explanation. Okay, friends. How the trading happens, how that is gets settled, which you need to understand. Then I go to the technical part of that. You know that when you want to sell the shares, then can you directly go to the stock exchange? No, it is not possible, because the stock exchange have their members. They are called the brokers. The brokers are the members of the stock exchanges, which are only allowed to participate in this trading session. They are only authorized because of various reasons. I am not going into the details of why the brokers only can do, why not others. Yes, still that proposal is under consideration with the SEBI. Why not, when everybody have a bank account, they can directly link with the trading system through which they can buy and sell and participate. So probably it's not so far away that can be implemented. Okay, as of now, so this is the system, it is functioning. Okay, I explained two more points before I go into the technicals. Number one is that when you want to sell the shares, what you have to do, you need to go to any of the registered broker. They are the members of the stock exchange, maybe in NSE and BSE. I hope that most of you know that there are two big stock exchanges in this country. One is that National Stock Exchange of India Limited. Another is the Bombay Stock Exchange. The Bombay Stock Exchange is one of the oldest in the world. And the two stock exchanges are functioning in India. And I'm not right now going into the commodity stock exchange. These two exchanges are allowing to do the equity shares and all kind of debt instrument, and also the currency trading, and also the commodity trading. These are all the various kind of product are allowed to be traded in the floor of the stock exchange. You clear, friends? Now, as an individual, you are a shareholder. Now you would like to sell some shares. For example, this is a Tata Steel. This is a share you are holding, you want to sell it. So what you have to do, you have to go to and approach the broker, wherein you need to open one trading account, another account called a demat account, because the shares what you are holding today, no longer physical shares are valid for transfer. If you'd like to transfer any of the shares you are held, which has to be in a dematerialized form, in an electronic form, the physical shares are no longer allowed to be traded due to various reasons. Okay. So you have to open an account. So you will be given, any investor, any shareholder will be given unique client code and unique dematerialized account. It's nothing but like a bank account. The demat account is similar to the bank account you have. Due to the KYC process, the account is, what is the difference between demat account and a bank account is that in bank, you deal through your currency, your cash, your check, everything. Whereas in the demat account is a similar nature, but you are dealing only on your financial asset, like a mutual fund certificate, equity share certificate, or a debenture share certificate. Even today, even your LIC, your so many other instruments can be kept by way of electronic dematerialized form. Okay. You understand that. So that is how it's working. Now, what you do that when you hold a particular shares, you go to your broker, you get registered by yourself and get a unique client code, and you have a demat code. This is the basic mandate relevant to anyone. Anyone who wants to deal in the financial market should go through this process. Right. Now, what you do that, you hold a shares. Now, before I go into the system, I again explain one more point is that there are two functions handled in the stock exchange. One is that it facilitates anybody wanted to buy and anybody wanted to sell. So these two functions the stock exchange does. This is called a trading function. There is another function called a settlement process, because when you sell the shares, you have to get back your money, right? Once you sell, then you have to get back your money. How to do that is called a settlement process. The friends, today, this is different from another market, like you go to a vegetable market, you go to a steel market, you go to a cotton market. Each market have got its own characteristics. It's one different. Now, for example, you go to a shop, departmental store, you buy some groceries. What do you do that? You buy the groceries and pay the cash immediately. This is called the cash transactions. Either even by credit card or anything, debit card. This is called a spot market. Otherwise, spontaneously, you get your things and you make payment for the goods you purchased. Get my points, friends. Whereas in the kind of share market, you know that you don't get like that. As soon as you sell, you will not get it. The trading is one kind of a process and settlement is another kind of process. What do you mean by that? Once the shares are sold, what you have to do from your demat account, it goes to a function carried out by an organization called clearing corporations. Once the trading is done, the rest of the part is taken over by the clearing corporation. What they do that, for example, the Bombay Stock Exchange on National Stock Exchange, what you are seeing on the screen, once that is done, and what they do that, they transfer the entire process on the end of the day. The timing is 9:15 to 3:30. After that, the process have been given to the clearing corporation. Thereby, they give you a contract and a net balance value. For example, you sold 100 shares. You are entitled for example, you sell at 425 rupees 0.85 paise. After adjusting the security transaction tax and brokerage, you get 425 rupees. Into 100, that means 42,500 rupees. The shares from your demat account has to go to the clearing corporation. It should be transferred to the clearing corporation. They take the shares first, then only they make the payment to you. Otherwise, once they make a payment, if you don't give the shares, then it will become a problem. It's too risky. The same way, there is a counterparty. Every transactions, you know that as per the thing, there are two parties involved. When there is somebody selling, there should be somebody buying. Otherwise, you cannot have a transaction. You get my point, friends. If one person is selling, there should be another person buying. Otherwise, it cannot have a transactions. The same way, the buyer has to make the payment to the clearing corporation. Then the shares will be transferred to your account. So this is called a settlement process. The person who's selling the shares have to give the shares and take the money. And the person who buy the shares and transfer the money to the clearing corporation and take the shares. This process called a settlement. You understand, friends? This is a settlement. The trading is executing the order. The settlement, this is called T2 system. That means a trading day. For example, today is a Thursday. If I do the transaction, this is called a trading day. From here, the entire transaction has to be settled within 2 days. That is called +2. That means Friday and Saturday. If that is a holiday, then that will be done next working day. So the seller have to deliver the shares within 2 days. That is a +2 from the trading day. And the same way, buyer has to make the payment to the clearing corporation and take the payment. You understand, friends? This is the basic of a trading and settlement happening in the stock exchange. Now I'll go back. Now with this basic background, now I'll show to how the trading happening, what all the technicalities involved, how you can track so many things, and how the trading is happening. Everything we can explain one by one. Okay. What you are seeing, friends, now is the screen. I have a combined screen of NSE as well as a BSE. See here, I just click this here and see here, you get a Bombay Stock Exchange, you get MCX, you get an NSE, you get NFO, is nothing but a futures and options segment. And again, you know, when you talk to the market, you know that you have different market segment. I show you that this is see, these are all the market segments, equity segments, these are government bonds, like that, F&O options. There are a lot of market segments are there. Various kind of markets segments means the platform have been divided by various segments to accommodate various kind of products. Friends, are you clear? This is an interesting, quite an interesting subject. I wish every one of you should participate in this, and we can provide this kind of platform. You can daily practice by yourself, and most interesting things this will to learn. What we study theoretically is totally different from what is a practical. When you do that, there are various kind of options are available. As a student of finance, you can learn today that you can even decide what you want to be. Friends, I tell you that many times I used to ask a question whenever I go to your classes. What for you are studying this course? What you want to be? Many of them do not have a ready answer. Some of them will come and join because somebody have told me to join MBA, I'll get a better job. My parents have told me to join MBA, I'm telling. Otherwise, my boyfriend, my girlfriend have joined, so I am also joining. And somebody thinks that, you know, if I read MBA, then I will get a quick job and better salary. Somebody says, you know, just like that, I'm reading, sir, no problem, I will get any job, no. Like that, there are various kinds. See, there are two options you have. One is that after completion of your studies, you can go for an employment, or you can choose your own career in the stock market. Here, plenty of opportunities are available to become a self-professional. You can be a trader, you can be a stockbroker, you can be a financial advisor, you can be a wealth manager, you can be a portfolio manager, you can be a research head, you can be an informative manager, you can become a treasury head. Like that, you can do on your own. Plenty of opportunities there, unlimited opportunities, and no retirement. You can work till your lifetime. Only knowledge. and you can earn as much. There is no limitation for your earnings. Whereas when you go for a job, you have a limitation of your earnings and you have a retirement. Here, nothing. You can practice as long as you can. That is an opportunity in this market, friends. I am telling you, once you go into this, you love this, and you have a plenty of an opportunity that I can, if you need, I will guide you how to become self-professional in this field. Okay, I'll come back. Now, see, this is the screen. This is, I have organized for my purpose. You can organize by yourself. You can do that. There is no problem in that. This is a platform provided by NSE and BSE, and thereby any selling and buying are happening. This is nothing but auction market. Any market for that sense is an auction. There is somebody is a seller, somebody is the buyer. Somebody is supplying, somebody is demanding. Without and supply and demand, you cannot constitute a market. Any market should have the supply and demand. Okay, that is the fundamental principle, everything, including stock market. Now, there are various kind of shares are listed. I told you already what is the listing process. I can see that you can see Tata Steel, Ashok Leyland, like Tata Motors, Reliance Industries, Sanofi, India Cement, NMDC, like that. There are various shares. I have Bajaj Finance, Federal Bank, HDFC Bank, State Bank of India, TCS, and Bandhan Bank, NTPC, like that. Various things I have organized. See that this is the things. Now, what you could see that there is also, I have shown you that this is called a Sensex. I explained to you what is this. This is called a Nifty. This is called a Bank Nifty. Here I have a trading column, sir, trading symbol. That means which company names. This is a bid quantity. That means the buyers, how much quantity want to buy and what rate the buyer would like to buy and what is the selling rate and what is the quantity seller have ready to offer. And what is the last trade? This is a more dynamic. What you are seeing is a live market, friends. It's not just like that. It is a live market. What is happening at this moment? And what is the percentage of change from previous day today? And what is the average trading price and the volume traded and open rate and high and closing, last, low, like this. There are a lot of columns are there, whichever you can organize it as per your requirements. Okay. Now, what is this? Why this red and blue are happening? This is a price fluctuations. I have tuned for my purpose that red means it's going down. The blue means it's improving from the previous level. Red means it's decreasing from the things, just for our understanding. On the color code, I can understand whether the market or goes down or goes up. This is an individual stock. You have again two different market, as Dr. Amudan put it in the beginning, that derivative market and the cash market, everything. And so this is I explained to you all these things. And equity. Now this right side, I show you that column called the Sensex, Nifty, and Bank. What do you mean by Sensex, friends? It is an index. Okay, understand? Index is a common word. Index can be applied to anywhere else. What is an index? Index is just a number which measuring, just listen carefully, measures a change of set of value. Here again dividing changes of set of values over a period of time. There are four components involved in the index. One is that a number which is measuring the changes of a set of value over a period of time. The set of value may be anything, maybe a commodity, maybe a gold, maybe a silver, maybe an equity, maybe a debenture, anything. Period is again, it may be 1 minute, see here, second by second. So that this is called an index. The index is applied into the stock market. The Bombay Stock Exchange named the index called a Sensex. Here it is, Sensex. You know that this tracks 30 shares out of 6,000 shares listed with the BSE, which has named the index called the Sensex, which is one of the popular index in the world, which measures the change of set of values in the equity. The shares, all the shares, 30 shares, change of values are measured second by second and given this number. This is called, see now the index is 39,251, see changing, and it is 179 point plus compared to yesterday's level. And also here it shows that decrease in point by point, but overall 0.45% have been increased from yesterday level in terms of percentage. This is in terms of number. The same way, the index named by NSE is called Nifty, that tracks 50 shares out of its 2,600 share listed with them. So that measures and giving the index number is called Nifty. Why this is required? See, index is just immediate reference point to understand the market is moving up or moving down, market is good or bad. It is a phase of the market. See, when we today look at this index, you can very well tell what is the stock market today, moved up or moved down, or a bullish or bear. You can say no, it is a plus or 183 point plus. So that means market is good. Just look at, without going into the details of all the companies, you can very well see that you're looking at the index. Same way, exclusively bank, I can say that there are 224 points have gone up. And see here, and this is the reflection happening. And here I have organized all the banking stock like a Federal Bank, Indus Bank, Yes Bank, RBL, Axis, ICICI Bank, State Bank. Here you can find the percentage of changes are, see that IndusInd Bank changes by 3%, and there's 6%, there's a 1.8, 1.7, 2 point, whereas this is the HDFC Bank is a minus of 0.1%, whereas Bajaj Finance minus of 0.75%. Just look at that, you can understand today the market is a bullish or a bearish. You get my points, friends. I hope that you follow that. Okay, this is how the index is important. And also that, as rightly he mentioned in the beginning, that there is a derivative product. So when you want to deal in this market, instead of dealing in individual product, this index itself become a derivative product. That means that index is one of the futures, and you have the stock futures as well as the stock options that become a derivative market separately. Thereby, you can participate in this market. Okay. Now, this whole market, you have various options if you want to be a player in this market. What are the options available? That you can be a trader. That means you can trade on a minute by minute basis. And you can also be an investor. You can buy as long as you can do that. And if you want to do an arbitrage, you can do. What do you mean by arbitrage? See, there are two exchanges, NSE and BSE. There may be some difference of price, mismatching of the price between the exchanges. Thereby, you can buy in this and sell in that. That is called arbitrage, taking an advantages of price mismatching in the market. So that is called a price disparity. Due to various reasons, there may be mismatching of the price between the same stock. There may be difference. I'll show you that. How I'll show you that. Like, see, for example, now I'll put that salsa. I'll just show how I'm adding. This is NSE. I'm just adding that script. And here I'm adding BSE also. For example, BSE, same shares. I will put I'll add a group, B group. I'll add that. Yeah. Now, same stock, I'm explaining to you for two exchanges, and just I'll make this understand. Are you seeing, friends? Are you getting it? Okay. And now Salsar Electronics is a one company, the same company traded in the NSE as well as in BSE. Now you see that here it is the seller is at 119.109. Here is 108.90. For example, this is a 180 buyer is available. Here there is a seller at 109. What I can do, I can see that it's changing. Now I can buy at 180, 108.8, and the same share I can sell here at 109. That means I make 20 paise difference between the two stock exchanges. I do simultaneously. This is called taking arbitrage. Arbitrage is a word you need to understand that there is a mismatching of price between the market, which I take an advantages. Okay, that's one thing. So also this is between the same day. I'll show you another example that, for example, here I'll show you an ICICI Bank, which is a derivative segment F&O. This is a current month in the month of August. August future is trading at 395.50, whereas same ICICI Bank September future, so buyer at 96.60. What I can do, I can buy the share at 395.45. I can sell at 396.55. Thereby, I make 1 rupee difference. That means if I do 100 rupees, 100 shares, I make 100 rupees. Or if I do 1,000 share, I can do 1,000 without taking a much risk of the price movement. Okay, this is what I can do. This is called calendar arbitrage. That is called exchange arbitrage. Like that, I have various options I can do that, very, very advanced. I am not going into the details. Now I'll come back to, there are two things. One is that why this kind of fluctuations are happening, minute by minute, second by second, the stock market things are happening. There are various reasons. One is a technical reason, another is a fundamental reasons. Valuation techniques. I hope that you may have a separate subject called evaluation, that's called a fundamental analysis and also a technical analysis. The fundamental is reflecting the book value, the performance of the company, which is here for a longer term. And the short term is that technically when to buy, when to sell, all these things when you happen, you know that is a technical nature. Okay, before I go into the another one, I just explained to you that, for example, now you want to do, you hold a Tata shares. Now, how you have to trade, you have to call your broker. You can ask the market depth. See here, I can put a market depth. See how many buyers are there in the market. How many sellers are there in this market? What is the quantity of buying? How much quantities are selling? So this will give you an indication that whether more sellers are there or more buyers are there. Just a minute, sorry. So this is called a market depth. You understand? To understand the market depth, you can find out whether the buying is more or selling is more, the market is a bullish or a market is a bearish. You can understand there are a lot of information which are disseminated by the exchanges to take a decision whether you can do buy at now or sell at now, whether that is a decision is yours or the investors. But the exchange gives you lot of information on this front. For example, now I just to explain to you, for example, now see how the tradings are happening. I will put that, see when I want to, for example, Tata Steel, I want to buy. I can put this button wherein this is a buy order entry. See, this is an exchange I'm choosing, or I can do BSE, MCX like that, NSE. I can have a limit. That means the limit means when you want to buy something, friends, you need to be clear. You want to buy the shares at a particular rate or at a market rate. That is your choice. The market rate means time being it is quoting around 425.45 is the seller. Okay, you can tell your broker buy that. Or you can tell, no, I want to buy only 420 only or 421 only. For example, now you give a limit order. Now, I give that client code, equity, Tata Steel shares. And what I do that, I want to buy one share. I want to buy what rate? For example, 421. And okay, what is the code? I have to put, I told you already when you become a client, you will be given unique client code. Now I put my code. Now see my name is appearing. Now I give my orders. See here. What I do that, I just submit that order at 421. Okay. Order is now, for example, now I put the order and then I can check whether the pending. See you here, you find out here. There is a message is appearing that means my margin is not there. Your margin RMS, that means risk management department rejecting your order because you do not have margin money in your account. So without your margin money, you cannot buy the shares. You get my point. Now I'll go back to another code. For example, one share, 421 is the rate. Whereas the market rate is 425.40. I'll put another code, for example. Now I put that. See, the order is accepted. Now you go there, your order has been accepted. One share, this is a NSE, this is a client code, this is a buy, this is a limit order, this is a company called Tata Share, this is a 1 rupee at 421. If the rate comes to this 421, you can go and see the market depth. Then 421 nowhere, because first best 5 rates are appearing in the market and 421 is nowhere. So unless, unless there is somebody is ready to sell 421, how you will get the shares? You will not get the shares. You get my point. Okay, when 425 buyers are there, why someone should give the share at 421? Nobody will give you. So you have to wait in the queue. So when you feed, there is an order book in the system. This order, you go and get registered at the order book at a 421 level. Whenever the rate comes down to 421, your order will get executed. Otherwise, you will not get executed. You get my point for how the order. Same way, when you want to sell, it's a vice versa. You know that when you buying, that when buying comes, the best rate, it gets the first priorities. When the selling comes, the least rate gets the best priorities. This is how the auction process is happening. So you get, now you do not want to have that order. Okay, you tell that, okay, you go back and you can press and you can cancel that order. Delete. The order has been cancelled. See that the bottom is getting and your order has been cancelled. Now I can do that. For example, now I will tell you that, 1 minute, what is the things? I'll explain to you. Now, for example, now for 884, I have bought the shares. Now, here, these shares I have bought at 884, 100 shares. Now, the loss is 650 rupees. The current market is 877.50. When 870, that means notionally my purchase price is 884, but the current market price is 877.785. Now, assuming that what is the share, I will go back or pharma. Just see, this is share. Okay, now I would like to buy at a market price. I am giving live example, friends. Please understand that this is a real happening. It's not a just pretending, it is a real happening. I am going to buy one share. I bought. Okay. Now I bought the share 187.70, one share. This is the time, trade time. See, this is how NSE, user ID, my code, my buy, my script, the exchange order number, what price I have bought, what is the quantity I have bought, and this is the thing. Okay, now I have bought at 877.70. Okay, now the current market rate is that 877.55, 877.95. What I will do that I sell the same shares 877 at 95. I put the shares and then I put my code 015. See, now the price is 877.90. You get my point. Are you seeing the screen, friends? Now my purchase price is what? 877.70. I have already sold the share. See that. I have bought and sold. I bought. See, friends. I bought at 877.70. I sold at 877.90. What is the within how many seconds? It's a 1 minute. Just a minute. I bought at 11:53.56. I sold at 11:54.55. In 1 minute time, I sold with a difference of 20 paise, 25 paise. One share is a 25 paise, my profit. If I do 1,000 shares, that means my profit is 250 rupees. So this is called intraday. Within a day, I buy and sell. I make money. I may lose money. It depends on if the market goes down, I may lose money. If the market goes up, I may gain money. Still, I can do the trading. 1 point. I told you the first one is an arbitrage. How a person can do an arbitrage between a mismatching of the price between the exchanges. Now, sorry, I have practically explained to you that I bought and sold, I made 25 paise in 1 minute time, which if I do that almost 100 shares, I would have made 250 rupees. Now, see, if I had sold right now, I would have waited, I would have made more money right now. For example, now I can, same way, I can sell and buy back. This is a one market where you can do selling without having the shares in your account. That's called a short selling. When you feel that the market prices are very high, and you can always do that. You can sell and buy, you can buy and sell depending upon your perception of the market. So this is called a daily trading. You understand, friends? You get my point. Now I have bought these shares at, now my net holding is 100 at Aro Pharma. For example, now IndusInd Bank, I was holding in my account 100 shares. I sold it 588. Now current price is 586. So I have made a notional profit of 215 rupees, 230 rupees right now. So now if I buy back the share, I will make 230 rupees. So this is how you do intraday trading. See, now the Aro Pharma is 79. I bought at 77.95. Now it is 79. So this is what, this is the fluctuation happening in this. This is what you have to do.
So there is
Very
a small question.
Sir.
So one question, sir. So
Yeah,
you said no Tata Steel. Tata Steel is very much available in both NSE and BSE market.
Yes.
If I buy from NSE market, can I sell it in the BSE market, sir?
You can, but you know, both are different exchanges. Since you know that both the deposits are not integrated, you have to take delivery here. You can buy delivery there.
Oh, take delivery there and I can buy it. So that the two different.
For example, now, for example, this is an NSE. What I will do that, for example, Tata Steel. I'll put a Tata Steel here. 1 minute. See here, Tata Steel NSE rate. NSE rate is quoting 426 buyer, 426.15 seller. Whereas in this case, 426.10 buyer, 426.15 buyer. In this case, you cannot do much arbitrage because there is no much difference. If there is a difference persists, you can always do that. Provided you need to, suppose wherever the shares you sell it, you have to give delivery. And wherever you buy, you have to make payment and take delivery. Now, the both cross exchange settlement is not still facilitated.
Right.
Okay.
Okay.
Yeah, because both the clearing house are separate, both the DPs are separate, and both. But you can, as a DP, you can give. If you have a CDSL depository, you can give delivery to NSDL depository. NSDL can give CDSL depository. But the exchange-wise, still the settlement is not clubbed.
It's not clubbed.
It's not clubbed. So then, if that is so, then you will have more arbitrage. You can do more arbitrage, so you can make a lot of money in that process.
Right. But currently, it is not so, right, sir?
Right now, the exchange is not clubbed. The settlement has to do separately.
Oh, settlement has to be done separately, so that I cannot.
Yeah, because the margin systems are separate, margins are separate, and settlements are separate, and you have to give delivery and take delivery.
Right. Because it's NSE, the price is cheap. But BSE, the price is always costly. That's why I can buy from NSE and sell it in BSE.
You cannot generalize it, but you can do so. If it is, you can do so, provided you should have a money and share in your hands.
Right.
When you sell, then you should have a ready delivery to give. When you buy, you should have a money to take delivery. Okay. Right. Sometimes the brokers, you know that brokers may adjust your pay in payout, but they cannot adjust the shares.
They can adjust shares. Okay.
Yeah. Because sometimes the pay in payout, if you have sufficiently, you can do that. That is the reason I am giving you explaining these features. So you can choose. That is what I told you, the students, you know, that you have plenty of an opportunity to play in this market. You can be a trader. You can be an arbitrager. You can buy, sell. There is also an auction market wherein the auction is always higher than the current market rate. You can deliver it to the auction market and buy it in the cash market. And also you can do arbitrage between a cash market and, you know, that, for example, now I tell you that, see, Tata Steel is a cash market. I go for example, NFO, and now I give the future stock. Then I go for a Tata Steel. Is August. Today is August expiry date. Now, for example, see that. Now I go for a September futures. See, now September future 428 is ready to buy. Whereas in the month of August, 426.40. Suppose you have a cash in with you and shares, and you can always sell it here, you can buy it here. So you make 2 rupees. If you are doing 100 shares, you are making 200 rupees. If you are making 1,000 shares, you will make 2,000 rupees. See, for 4,28,000 rupees of an investment, if you are making 2,000 rupees in a day, that means an 0.5% interest you are making. And 0.5% per day interest is a return on your investment. It's an excellent compared to 200 working days. You make almost 100%. These are all. This is a mind. This is what you need to do that. This is an opportunity. See, if you go to a bank and deposit your money with almost 6.5% in a year per annum, 6.5%, whereas in this market you can earn 0.5% a day, and almost that 200 working day, even assuming that 50 working day you are doing, still you are making 25% of return on your investment, which is an excellent 3 times of your conventional way of fixed deposit return. This is the market. But people do not understand the real intricacies of the market. When you go and talk to someone, they say that the stock market is a gambling. Stock market is a speculation. People may say that it's their opinion, their experience maybe. But there is a speculation. I agree that there is an element of speculation, but it's not 100% speculation alone. This last 2 months alone, the foreign institutions have invested more than 30,000 crore in this market. When I invested in this market, see this Tata Motor, we bought at 74 rupees in the month of April. Today is 144 rupees. April, May, June, July, and August, in 5 months time, you got a 100% return. Your 74 rupees have appreciated to 444 rupees with 5 months of investment. Where you will get this kind of return? But what we need to that, there may be some shares which would have bought 300 rupees, maybe has come down to 200 rupees. For example, I have bought a State Bank of India at 330 rupees last September. Today it is around 200 rupees. State Bank. It may happen. But how you choose that, how is your risk appetite, everything depends on the State Bank is 214 rupees today. It was 314 rupees in a year back, 100 rupees fallen. So that is what I told you. When you come to the stock market, there is a risk associated with this. But when you take more the risk, more the return. Lesser the risk, lesser the return. How that depends on what is your risk appetite, friends. Don't generalize, don't copy, don't compare with others. Our bad habit is always we compare with others, what others are doing, what this person is doing, that person, nothing, don't do that. You please study about yourself. Do you have a risk-taking ability? If you have a risk-taking ability, this is the place where you can make tons of money. I'm betting on. It is true. You have, but we have to play a game with a sensibleness. With a serious investment is not a hobby. It's not a time passing. Investment is a serious business. If you want to be successful in any business, you have to be serious and sincere to the business. Then only you can make money in that. Okay, friends, now I'll just tell you about, for example, now that when you do that Sensex, how the market has behaved over a period of time. I can always show you that. And See friends, I'm just going back to the 5-year chart, how the census have behaved in the last 5 years. This is very, very interesting chart. You can watch it. See that how this is happening. See here, this is a bottom line. Friends, just 25,516 point. You see that 2017, the bottom. Then thereafter, the March 19, the date on which exactly the lockdown was announced. March 20, the lockdown was announced. See the fall in price from 42,000 level, it is fallen to 25,000 level. That means how many points? How many points? From 42,000 is the historical high. See here, 42,120. Here, what is the level? And 25,000. That means almost 17,000 points have been fallen. How many days? This is the day. What is the date? You see here. This is the date. 15th January. From 15th January to 19th March, 17th March, 19th March, or let's just, yeah. See this March, within 3 months, 2.5 months, the market has fallen so much. And see this is a technical. Friends, MBA students, I like to tell you that please do this work. Do the technical analysis. An excellent job you will get. You will also get a job. You can become an independent professional. See that how the formation of this, see exactly matching. And this is called a double bottom. And that gives you technically the market of recovery. See here, this is a double top. You will see here. See here. This is the top where exactly the market has fallen. See here, when double bottom happens, exactly market has recovered. If you would have invested in 15th of January like that, you know that what is the market recovery today? It's 39,000. I'll show you that. Here, this is a live Sensex. It's a BSE. This is a single day. Today, see how the market is behaving. Intraday, you have plenty. This kind of volatility is the opportunity for intraday players. See, this is a 1 month chart. And this is the 3 months. This is a 6 months. See, 3 months market, how the market from May, how the market has climbed up. How much is the climbed up? See, market is moved up. See the 6 month chart. See that this is the falling and this is how market has recovered. See the 1 year chart. See that how the market has fallen after March and how market recovered from March to till now. This is an excellent opportunity if you are a player on index or if you are a player in cash market or you are an investor. So many arbitrage, player, speculation, so many things. See here, this is a 30 stocks which BSE is following. And you know that, see, 8 stocks are in red, almost how much? And 12 stocks are almost in green. That means today the market almost 12 stocks are moving up in a green and 8 stocks are in red. So the market is overall is in a bullish mode. So you do an averaging concept. I come back to again cash screen, and this is a screen where you do that. But just you can see that how, look at that. When we started the session, it was 170 points. Now it is a 204 point plus. From 4.45% to 0.53, the market has increased. So various, I will just come back to the technical side. And I was explaining you about the Tata Steel, and you know that how the August future and September future, I can just delete the screen and I make cash. And so this is what I do that. Then when I do that, market is buying and selling, and also I can configure the script. I can also do the market depth. I can do analysis. I can see that, for example, Ashok Leyland. What is the 52-week high is 87.50. 52-week low, 33 rupees. And there is also a called, so here you can see the upper circuit limit and lower circuit limit. See, there is a market. I just before that, why this kind of fluctuation? Why this fluctuating happening? What is the reason? No other market. If you go to a vegetable market, when tomato price or a coconut price or a brinjal price changes minute by minute, no. They fix the rate in the morning till the evening, the same price goes on. The next day, maybe the price change depending upon the next day market conditions. Whereas in the financial market, the price are getting fluctuated minute by minute, second by second because of various reasons. One, I broadly categorize that fundamental reason and technical reason. The technical is based on the demand and supply based on today, how many people are trying to sell, how many people are trying to buy. Number two, the news is driven. Any bad news or good news in the company and the economy, like, that corona is increasing, people are dying more, or corona is contained. See, you may ask various news happening domestically and outside the country. For example, there is a suddenly, if another 10 minutes, if you get a message that the China war is broken, they are occupying our border, the tension, there is an international tension, border tension, geopolitical crisis. This will affect all the markets on a day-to-day basis. Even though the profitability of the Tata Steel, the profitability of the Reliance or Sanofi does not change on a day. The Sanofi is one of the best pharmaceutical company, and their profit is not affected just because of China border problem, or there is somebody is not well, or there is a clash between BJP and Congress, or political situation, or a parliament. Nothing is going to happen, but still it is all taken into account for the market. This is a market where it's more sensitive and react so fast. Okay, you get my friends. But in a long, these are all the technical reasons are in a short term. This is a short term. Whereas when you think on a long-term basis, the long term, again, you have to define what you mean by short term, what do you mean by long term. But technically, as for the taxation purposes, when you buy shares, when you sell shares within 12 months, this is called a short term, or gain or loss. When you do buy and sell after 12 months, that is called a long term. This is for the financial taxation purposes. But as an investor, short term, I can think that the long term, see, I would like to buy, for example, I buy an Ashok Leyland today at 73 rupees. I am ready to wait for 5 years. Definitely the share price will go 200 rupees or 300 rupees, depending on so many condition parameter. I do my research. That is another area where you have a plenty of an opportunity, friends, students, friends. After you complete your MBA, you can become a research analyst, where you can analyze the Ashok Leyland, how it is performing last 5 years, how the future will be, how comparatively Mahindra is doing, Ashok Leyland is doing, or another Tata Motor is doing, or who are all their peers, and how they do well. Okay, in case if the electric vehicle comes into market, how they will be affected or benefited. In the case, what will be the growth? These are all projecting, and advise my investor, please buy this stock. You understand, friends? So technically, you can give an advice on a day-to-day basis to buy or sell something. And fundamentally, you can give investor that you can make a lot of money by doing an investment advisory services on your own. And you can get subscription from the people, and you do that. You get my point, friends. So that's how you can go on doing that. You have plenty of an opportunity to make your own self-career in this business. And also we can do and this kind of buying and selling activities. Of course, there are a lot of points I have to explain, but again, there is a time limitation. Probably you may have an extra session or something, and probably I have to confine within the time. I have a lot of things. If you are, I'm sure, friends, this is quite interesting field, quite interesting. You can try